and welcome to the Financial Fox TV show. I know I have a weird background behind me, but I wanted to have something different just to feel more connected with the universe, particularly in these times where reality is depressing and you still need to look forward, right? Anyway, I hope you're all keeping well and safe. And hey, we are back with another crypto episodes where we will dig into the future of money and finance. We will be talking about investment strategies and also trading strategies and discussing the pressing issues of crypto regulation and education. My amazing guest today is Jeff Hancock, co-founder and CEO at Coinpass, the UK-based cryptocurrency exchange platform. Hi Jeff, how are you?
I'm very well, Stefania. Thank you for inviting me on the show today. It's good to be here.
Let's crack off with the concept of money and let's say the future of money, how money are changing. And today we are going to talk about crypto, obviously, which is a market that is much more mature than what it was 5 years ago, for example.
Yes, and I completely agree with you. I mean, crypto from 5 years ago, and even I think money as we know it 5 and 10 years ago has definitely changed. I'm going to take a very wild guess here. I never like to guess anyone's age, but I think we're roughly around the same age and cut from the same kind of generation. And when I was growing up, it was all about pocket money. And you would get your coins in a jar and you'd save that up and get it to a note, or you get something in a card at Christmas, and that would be your spending money. And it was quite normal for you to have your cash in your wallet and you carry it around with you, and that's how you did business. So that's how you paid for goods and services. But nowadays, everything's digital and everything's mobile, and our concept of money, our concept of investing, and our concept of moving our wealth around is all digital and it's all on screen. So the next, I don't like to call it a revolution of money because crypto is not going to replace the US dollar or the pound anytime soon. But I think as our concept of money continues to evolve, the way at which that is represented, i.e. on a blockchain and in crypto, it's more of a matter of time of when, not if. And I think especially the next generation of people, I think we're back around to generation A now, or generation AA, or whatever they want to call it. Their concept of money is going to be supremely different to our upbringing and kind of what we were used to growing up. So I think the future is bright, and I think anyone that's even looking at this space now will have a massive advantage in 10 years' time.
Yeah, and also we are seeing that more and more institutional investors, not only private investors, are actually taking a position in the crypto space. So do you think that there is also the COVID and the lockdown and all this kind of weird experience that life we are living in is kind of has brought an impact to the future of money?
Definitely. I think it's a very, very big question, but I definitely agree with, has the current climate affected the way we think of money? That I would say most definitely. I read an interesting statistic this morning, actually. I haven't had a chance to substantiate all of it yet. I'm only halfway through the article, but something like 20% of the US dollar supply has been printed this year. So the history of the US dollar is however many decades the current US dollar is, like 1912, 1913, 1914 to now, 20% of that supply is just this year. That's insane, considering we've been in kind of lockdown pandemic kind of position since March, and now we're recording this in October. That's an alarming statistic. Now, if we think about, the concept of time and how we, I suppose, retain information, we can go back into a history book, we can go back into, any sort of internet research and look up, all the fiat currencies that ever existed. There's been 600 to 800 different fiats, and most of them have failed. They have an average lifespan of about 30 to 65 years, and a lot of them are coming towards that maturity date in their current format. Now, when we read some of these historical facts about, when the US dollar came off the gold standard and, all the other kind of things like that, those are kind of outside of our, normal lifetime. So they seem like an exceptionally long period of time. Or inflation over 10 years did this, and devaluing over 30 years did this. And when it's in real time, it's, your day-to-day living, like buying milk, paying rent, that kind of stuff doesn't really sit in the forefront of your mind because it's such a slow process. But I think with what we've seen in countries like Argentina and Chile and other places like that are experiencing hyperinflation, and some Western economies are thinking, no, that can't possibly happen to us. I think it's almost starting to happen with the amount of US dollars that are being printed, with the amount of pounds that are being printed. A couple of years ago, we were even seeing regular investors, business investors, limited companies in the UK taking positions in Bitcoin because they're a little bit uncertain about the future of certain fiat currencies like pounds and dollars. And I think now, with the huge amount of printing that's going on because of COVID, because we've noticed how fragile the financial system is, when people are restricted in travel, when commerce and logistics are affected, when you can't get food into supermarkets and stuff, and everything suddenly grinds to a halt. We're like, well, we need to fix this by printing more money. And with an unlimited supply of that potential, there's a very, very good use case for there's not enough Bitcoin to go around. Everyone's going to want it. It's a way that I can isolate my wealth outside of a government or outside of a bank. And that's why we've seen institutions and large businesses now name Bitcoin as their default reserve currency.
But obviously there is a problem here, which is about regulation. So crypto is still a market that is pretty much unregulated. And I think, this need of regulation is becoming more and more important.
Yeah.
What do you think on that? Do you think we are going to see governments start to kind of lay out some kind of regulation?
I think inherently, depending on the type of blockchain, depending how it's used, and depending if it's classified as a currency or not, there's a lot of different factors in there to why a government want to regulate it. Now, the businesses such as ourselves, like Coinpass.com, where we are a bridge between traditional banking and pound sterling into crypto. So we're an exchange, we're a fiat on ramp, and we have multiple products to help B2C and B2B do that kind of change and switch. It's the businesses like ours which front all of that regulation first. So we're going out there, we're putting our necks in the line, we're talking with the regulators, talking with the banks, talking with insurance companies, talking with security experts to make sure that our platform is secure to facilitate that kind of trade. And the regulators and the governments are brutally aware, and I think the biggest scare point for them is that someone can have their wealth in Bitcoin and it's outside of their control, outside of taxation, and more to the point, outside of anti-money laundering and terrorism financing. And those are kind of the biggest things that they have a problem with, is the AML front, not necessarily the tax front. That's very secondary, but it's the safety of those kind of investments. Now, the regulators specifically in the UK at the moment are targeting financial promotions and also what they call derivatives. So very advanced, very complex, very volatile products, and trying to keep them out of the hands of a retail investor to protect them. But as soon as you start protecting people from themselves, you can start to go down a very slippery slope. So I think regulation is healthy when it's done correctly, when it's not just trying to protect the consumer by keeping them away from stuff, but the regulation is there to keep an eye on the good actors and make sure they're doing the right thing, which I'd like to think we are trying to do really, really well and really hard at Coinpass, but punish and expose the bad guys, the guys that are, taking people's money and guaranteeing returns and cloning other companies and really dodgy websites. Those are the things that regulation is trying to weed out. And I think if they can do that successfully, then regulation can work. And regulation is kind of necessary for markets to work efficiently.
I think that's a really good point. Now, let's talk a little bit about Coinpass, because you are doing lots of things to keep your investor and traders safe, but also you are prioritizing education as well, which is a very important word in the crypto space.
Definitely. What we're experiencing right now, so 2020, even from, say, 2016 up to now, we're in the midst of, the newest emerging asset class. And I say asset class and not just the technology, because the last biggest asset class to come into the world was somewhere in the 1600s, when bonds and equities and foreign exchange kind of came about. So this is a brand new asset class where it can be a payment token, can be a protocol system, it can be a means of exchange, it can be a store of value. Crypto can be many different things to many different people, which makes it so exciting and makes it that there's something to learn. I'm reading on Reddit every day, Twitter every day, Medium every day, and that's just in my free time. Not to do with business, and that's because I need to keep up with the market as fast as it's moving. And I think the best bit is that not one person can know everything. So there's a lot to learn. On the flip side of that, there's also a lot of noise out there, which doesn't help, the newcomer to the space or the new investor learn about what's this Bitcoin thing, what's this crypto thing, how can I get involved? You can get into a very shiny penny syndrome very, very quickly. And I think that still shows the immaturity of the market. The market still has a long way to go to educate and help pick these people up, and regulation will help, because people putting out really dodgy documentation or promises, they'll fade away over time, hopefully. But what we want to do, as we want to push the market forward, not just ourselves. It's great that the market has grown from 35, 40 million people up to 95, 100 million in the last kind of 4 or 5 years. But what about the other 7 billion people that aren't here yet? The market's still incredibly small. So we like to produce content around our written articles, around our social media, around video that we're starting to do a lot more of now, around our podcast, to spread that wealth of information around there. Not just to promote our own product, our own service, but to put stuff out there to get the bigger audience on board. Because the bigger audience comes here, then Bitcoin will eventually kind of work its way up. When more knowledgeable and educated people come into the space, they're only going to lift up that knowledge space even more. And I think when everyone's working together on the same page to promote healthy conversation and healthy knowledge sharing, it benefits everyone. And that's kind of what crypto and blockchain was about in the first place.
Yeah, exactly. So let's say that you convinced me, right? And I'm
Yes.
a traditional investor that I used to invest in equity, currency, like other stuff, right? And I said, well, crypto is interesting, but there is so much out there, particularly in this craze of DeFi and stuff. How can I assess the project out there to understand they are good project and don't fall into traps where I'm actually investing in something that is going to disappear 3 months down the line, or is actually not a good project?
So I think in this new world of decentralization, and security and privacy, it's very, very hard. And a lot of people still get it very, very wrong. Right now, especially in the DeFi space, we're seeing an almost chopped down, accelerated version of what ICOs were back in 2016, 2017. Just to kind of recap for people that weren't around here in that kind of time, was they'd have a project or a brand. They'd have a team. Maybe they're a good team, maybe they weren't. They bring this website and a white paper up over a couple of weeks or months. They were usually quite long campaigns to kind of build hype and build momentum. People would contribute to that token, and that either be successful or they weren't. We saw another version of that with the IEOs, where instead of having to do your own marketing campaigns to get out to your own huge community now, you could do that on an exchange and they would help promote it for you. And there was a lot of controversy around, who's in the best favor is this for? Is it for the exchange? Is it for the token raiser? Is it for the investor? And now with the DeFi stuff, they are coming up, absolutely out of nowhere overnight with a website and a clone of a token and a clone of a smart contract with a little bit of a tweak to the idea. So there are like 5 or 6 different versions of YFI finance that have come up in the last 2 weeks to a month. We had the big fiasco with Uniswap and with Sushi. And I think now the kind of what due diligence worked, a year ago, is completely irrelevant now. You need to be plugged into this kind of space at all times to get that kind of maximum value to be able to get in and get out. And that's just kind of what that particular market is right now. There's a lot of experimentation. There's a lot of, unfortunately, still a lot of pump and dumps, which doesn't really help anybody. But it is one thing it is doing really, really well. It is trying new ideas exceptionally fast, seeing if they work. And if they're not a complete scam or a rug pull, they are testing the capabilities of tech and finance and marketing and hype cycles to see kind of what works. So I think for the brand new investor that comes into the space, DeFi is not something that I would recommend. I'd recommend starting with the very basement easy stuff like Bitcoin or like Ethereum, learning about what those tokens do. What's the benefit for you as the investor? Do you want to use it as payments, as a store of value? Do you want to keep it on an exchange? Do you want to get an interest rate? And then you can start to evolve your knowledge, because even just getting an interest rate on Bitcoin is great. There are places out there, something we want to offer in the future as well, is getting like 5% interest on your crypto. as well as having access to all the volatility. That's a really, really good, investment perspective there. Doing something with Ethereum and stable tokens and then smart contracts and getting into DeFi, that's something that's very, very accessible and is getting easier to do as the months go on. And I think as long as people have 50, £100, maybe £500 to invest and kind of dabble with to start with and build themselves a portfolio, the sky is literally the limit.
Exactly. I think you brought some really interesting point here. People should start with a very boring, kind of mainstream cryptocurrency, but also something important to make a differentiation is for example, if I'm the investor, do I want to invest or do I want to trade? Because the
It's a
approach
really, really good question.
to crypto is going to be different. So what would be the strategy that you would suggest in case I want to invest and in case I want to trade?
So I think it definitely comes down to choice, and this is, I get asked this question a lot. Where do you think Bitcoin's going, and what's the price, and da 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 da. And I think with any asset class, you want to look at volatility and risk, and then also your bankroll management or your total portfolio size. If you're just starting out and looking to make your first purchase and your first investment, then start with something that you're willing to lose. Just start with that, and then your expectations are zero, which is great. So I would say if you're going to go to have a really good night out in the town, you're going to take 80, 100, 150 pounds with you and have a really good meal and have a drink and get an Uber home at the end of the night. And that's an investment that a lot of us make on a weekly or a monthly basis, right? So I would say with that level, just to educate yourself, just to do it the once, set a budget that you're happy with to learn. That it could go to zero. Not saying it will, not saying it won't, but something that you're willing to experiment with. And that's usually buying a bit of Bitcoin, buying a bit of Ethereum, move it between some wallets, paying a few fees, and understanding what that really means. And when that little light bulb kind of clicks, and they're like, well, okay, no, there's value here, there's a bit of volatility here. This is a way that I can have it as part of my portfolio. I can hedge against traditional fiat currencies. I have my, other stocks and equities and whatever else over here. It might start to be maybe 1, 2, or maybe even 5% of your kind of total portfolio across all your other investments and assets. And I would say if you're looking to build wealth long term, you're definitely classified as an investor. So you might want to do something similar that you would do with your pension or with your ISA. Instead of trading really actively, is that you're going to try and accumulate more over time. So pound cost averaging or dollar cost averaging, if you're watching this in the United States, where you're contributing £50 a month or £25 a week or something like that. And we actually built an auto trader on our platform. So you just tick the box every time some money lands in your account and you put it to your Coinpass account, it automatically buys you some Bitcoin. So that's something that I do myself. I can trade, but I would definitely class myself as an investor because my time horizon is 5, 10, 15 years from now. I'm looking to build generational wealth. I'm not really glued to my desk watching trade positions every day. That being said, there are a lot of talented people that I know that are very, very good traders in the equities world or in the forex world, and they've naturally come over to crypto and brought some of those strategies with them because they're looking for 10, 20 minutes a day in the morning and then a little bit of time in the afternoon, and they're watching their positions and they're just trading the market on technical analysis. Sometimes it works really well in their favor, and sometimes they get stopped out because there's a lot of inherent volatility in crypto. And some of those guys do very, very well, and some of them don't, but that's just the nature of trading, I suppose. So I would definitely put it down to what's your risk tolerance? Where do you put your time and your skill set? Are you looking to trade intraday or intra-week, or are you a long-term investor like myself, which is looking to build wealth over a longer period of time?
That's something really interesting that you said. So that you are basically saying that if I invest £50 every week, that in average is better than basically invest everything right now into, let's say, Bitcoin. So this kind of like constant uh, investment in a long term is going to give me more returns.
So what it will do, it all comes down to risk. And I can never recommend one strategy over another because I'm not a financial advisor. I like to educate people. But it would basically say this: if you invested everything, your Bitcoin fund now, if it's £1,000, if it's £5,000, whatever it's going to be, if you go in right now today, then the only way you make profit is when it goes up, right? So you've kind of put your stake in the ground. From here forward, here's where I profit. And what happens when you make that big push commitment is that you tend to look at the price every 15 minutes to an hour. Oh, I'm a little bit of percent down, or I'm a little bit percent up. Do I sell it and take some profit, or what do I do? And it becomes a little bit, almost kind of self-fulfilling, that you're only going to be happy when it's up and you're going to be miserable when it's down. And then when it does go down, you might well, I could have bought at a discount. I could have bought 5% cheaper. There's always this woulda, coulda, shoulda going on in your head. And I've been there. ICO boom, all the other kind of stuff, crazy returns back in 2016, 2017. It's no way to live. Trust me. I didn't get this grey patch up here on accident. So what I recommend and what I think works for me personally, for my stress levels, for my lifestyle, is that I buy the same amount every single week. I think it's on a Monday. I don't even know the day anymore. I think it's on a Monday and it's a fixed amount. And what will happen is when we're going through a price rise, I will buy a little bit less because that 25, that 50 pounds buys a little bit less when it's going up. But when the price is going down, I'm actually buying at a discount. I'm getting more for my money. And what that will do over a longer period of time, say 6, 12 months, 24 months, is that my average entry price kind of flattens out over time. So all that big spiky volatility, I'm kind of nice and even in the middle. And if there's, what's Bitcoin going to do over the next 2 to 3 years? Like, well, what did it do 2 or 3 years previous? It's naturally kind of gone up over time. And that suits my investing style. One specific article I love referring to specifically for this strategy is if you look at the FTSE 100, the top 100 companies in the UK. And if you're investing into that index every single week, over 10 years or every single month over 10 years, you would have gotten a comparative return of, I think the number is, it's somewhere between, I think 27 to like 30%, something like that. Wow. Now, if you were actively trading it, which is a great return, right? Over 10 years, that's average. So average over 10 years. But if you were actively trading it, trying to get the lows, get the highs, all that kind of stuff, your return would only be about 17%, because if you missed any opportunities, the difference between 17% and 30% over 10 years is just a mere 10 days of price action. So half of your profit is made in 10 days. And that's the difference between being in the market all of the time versus trying to time the market and trying to trade it really actively, because no one has a crystal ball.
Exactly.
So so missing out on that very, very key 10 days of price action over 10 years, like 1% of the time, affects your return by nearly 50%. And that just kind of boggles my mind that, your potential loss can be amplified by simply not being active enough versus doing nothing. Doing nothing's great.
And this is something that basically you offer with the Coinpass, isn't it? Auto trading,
So it's a recurring buying system, and it's as simple as a checkbox. Every time I deposit some funds, so I set up a standing order from my bank. Every time the funds land in my account, it automatically buys some Ethereum or buys some Bitcoin. And what we're going to do over a period of time, the next few months, is we're going to build these little baskets. So when 50 pounds hits, I want to buy 25 of Bitcoin and 25 of Ethereum, or 75% Bitcoin and 25% Ethereum. We're going to be able to mix it up so you can build your portfolio in a few different ways. Yeah. And then I think what that kind of helps do is it establishes, if you want to be a trader, there are many places to trade, and we will have a trading platform as well. If you're an investor and you're looking to build your portfolio over time, which I think everyone should be doing, not just across crypto, but across other asset classes as well, is that dollar cost averaging in is by far the easiest, by far the least stressful. It works, and it's been documented for hundreds of years as a way forward. Being able to ride out those market cycles between bear markets and bull markets is one of the best ways to build generational wealth.
Okay, Jeff, that was great. And I think lots of people, they are interested in the space. They should actually go on your website and check out the Auto Trader, which sounds really interesting.
Thank you.
And that's everything. Thank you so much for being on the show today.
Stefania, thank you very much for having me on. It's been great to talk with you. I would love to do this again sometime, and maybe you can come on our podcast in the future and we can talk some fintech as well.
Definitely. Thanks.
Awesome. I look forward to it.
Bye. Okay, this is everything from the Financial Fox today. I hope that you enjoy watching, and please subscribe to our YouTube channel and social media to keep update with our news and our amazing interview. I will see you next time.